What was your journey to reach this point?
My journey in stock market started in the year 2011. At given point of time, betting 30% of our portfolio in single stocks. I wanted to be my own boss. I got Majesco shares for free. So I bought Mastec before the X date, and then they declared the demerger. On the X date, I sold it at the same price.
Now in US, they have a lot of indexes, lot of ETFs, lot of options. Have you seen this working in India as well with respect to indexes?
Yes.
What we have learned that when momentum falls, it falls deep. If I'm a normal investor, we are not used to seeing 15% drawdown, 20% drawdown. So if I'm playing a momentum strategy, how can I negate this or optimize it better? Hey guys, so in today's episode, we have Mr. Manish Dhawan, who has been a very big proponent of momentum and quant investing. And in today's episode, we will talk about his journey of how he went from finding multi-baggers in special situations to actually moving to quant, what is the future of quant, how an average Indian can also start learning about quant, and many more interesting things in this episode. So I want you guys to stay tuned. Also guys, I've noticed that most of you guys who watch this video do not subscribe to the podcast. And if you do subscribe, it will really help me getting bigger guests and it will help me growing the channel so that you can get more knowledge from this channel as well. So please do subscribe. Hi Manish sir. First of all, thanks a lot for coming on this podcast. Couple of things I want to address to the audience before we started. So by the way, Manish sir is one of the early proponents of quant investing and momentum investing in India. And I myself have learned a lot of this from his YouTube videos in the past. So this is a very good moment for me to also learn a lot from you and also for the audience to learn a lot from this, right? So Manish sir, first of all, thank you for taking out the time and coming here and sitting with me. First question I want to ask you is, how did you arrive at momentum and quant investing? Like, what was your journey to reach this point?
Right. First of all, thanks Shashank for having me here. Not that much of an effort, to be honest. I live right next door.
Oh.
So I practically walked here.
Nice.
That apart, I did get a chance to see a couple of your podcasts, and you're doing a pretty wonderful job. So,
thank you, sir. Thank you.
So congratulations on that. How I came to momentum investing. So to be honest, Shashank, this is not how I started. My journey in stock market started in the year 2011.
Okay.
And back then we were doing only one thing and one thing only, which was special situation investing, spin-off investing in particular.
Wow.
We got introduced to this, and this was a chance entry. I read this book by Greenblatt, You Can Be a Stock Market Genius. That book changed everything for me. So usually when somebody writes a book, and this has been my understanding, call it my paranoia or being skeptical. Usually when a book is written when the strategy has been saturated completely and the juice is out. Somebody wants to just now for vanity purposes write a book.
Yeah.
But in this particular case, that was not the case. I don't know why. Maybe it was a US versus India arbitrage. The book that Joel Greenblatt wrote was almost like a movie script. He wrote that book, and precisely that's how things were panning out in India. And so this is how I started. The spin-offs that were happening in India back then, we captured that, and back then we got lucky as well because it was a early move thing. We didn't know anything about position sizing, risk management, and when I say we, I mean me and my partner Daya. I met my partner Daya in one of the presentations I was giving at IIF, talking about spin-off investing only. Okay. He was in the audience, and we started sharing notes and realized that both of us doing the same thing. He had also read the same book, also one special situation book from Benjamin Graham, I guess. He's older than me in this industry.
Okay.
But we were doing the same set of things, and those spin-off investing, crazy risks that we took, we were at given point of time betting 30% of our portfolio in single stocks. I mean, in hindsight, it looks stupid, but luckily it worked.
Yeah.
And so this is how my journey basically started. So a brief background. Prior to 2011, I was in the corporate world. I worked for around a decade in companies like NEI Global, American Express, Hyper Quality. And for a person who was always interested in doing something of his own, I think I did rather okay in the corporate world as well.
Yeah.
But because I wanted to be my own boss, and by 2007, I had gotten interested in the stock market, and I was experimenting with spin-offs. These things started working out well. And so at around 2011, we decided to quit the job and do this full time.
Wow.
I had around 28 lakh rupees of my own savings and some money from mom. And then I got money from my friends, family, ex-employers, another, let's say 30 odd lakhs. And this was the starting corpus. That's how we started. How I got into momentum happened a lot later. So around 2014-15, while Daya kept on doing this spin-off investing, I started getting interested more and more in the quant side of it, the research that was coming from US. And so I started experiment. Some portion of my corpus started going into, it was not quant back then. This was basically very crude form of momentum investing.
Yeah.
Like what's going up continues to go up kind of thing. And that started taking shape. By year 2017, I had a structured product in place, and that's when we launched it for public at large.
Wow.
We were registered SEBI, RA and RIA, both. And then we got ourselves with small case as well. 2017 was when all our products were launched on small case. Value, momentum, and also combination of momentum and gold, which was MMG. So from 2017 to till date, we have had a stellar track record. We were able to beat the benchmarks doing this momentum investing. And now finally, 2025, we are out of small case and we are launching our own PMS.
Beautiful.
Both our products, value and momentum, will be showcased in a PMS mode.
Super. So first of all, congratulations for the PMS launch. So the spin-off and demerger that you mentioned that you were researching in the start, can you give us some examples of how that works?
Sure. I would love to. I have fond memories of demerger and spin-off, Shashank, because I initially made majority of my money doing just that. So I'll give you a brief background as to how you make money in spin-offs. Essentially, there are two ways to make money in spin-offs. One is called sum of the parts.
Correct.
And other is forced selling. Forced selling. So I'll go into detail in both of them. Sum of the parts, the best way I can explain this is by giving you an example of a conglomerate and a live example. Also, make it a family example. So let's just start. Let's say I have a family of 3 people.
Yeah.
I mean, this is a hypothetical example. In reality, I just have one sister, but for the sake of the example, let's just say we have 3 brothers. Manish Dhawan, I'm the middle one. Let's just say मेरा एक बड़ा भाई है, let's call him Mudit Dhawan.
Yeah.
And मेरा एक छोटा भाई है, let's call him Pradeep Dhawan.
Okay.
Now there are 3 brothers. And let's just say parallelly example is एक कोई कंपनी है. And this is a live example. जैसे एक स्पिन ऑफ हमने प्ले किया था ओरिएंट का. ओरिएंट सीमेंट वाज वन कंपनी. उसके अंदर 3 कंपनीज थी. ओरिएंट सीमेंट, ओरिएंट पेपर एंड ओरिएंट इलेक्ट्रिकल्स, जो ये ओरिएंट पंखे वाले. हाउ सम ऑफ द पार्ट्स वर्क is that a company has market has to value a company, right? How do you value a company when there are 3 different subsidiaries within the same company? A market would have difficult time evaluating or giving a valuation to a company जिसके 3 subsidiary हो, and all the 3 subsidiaries have different growth trajectories.
Yeah.
Like for example, let's take this example further. Let's just say my elder brother Mudit was like a achiever from day one. वो स्कूल में भी अच्छा था. जॉइंट एंट्रेंस एग्जाम में ही स्कोर टॉप नॉच स्कोर्स. आईआईटी में उसका एंट्रेंस हो गया एंड आईआईटी से भी उसका पेट नहीं भरा. देन ही डिड आईआईएम एंड आईआईएम के बाद ही गॉट द कैंपस प्लेसमेंट. अमेजिंग. गूगल पे इंटर्नशिप किया एंड नाउ ही सेटल्ड इन यूएस एंड नाउ ही इज आल्सो अर्निंग इन crores and planning to do a startup. Now, how do you value such a person if it was a company? So you'll basically say, what PE would you give to this company? A crazy valuation, right?
Yeah.
Right, because it's growing, and so PE of 90 is not a big deal either. 80, 90, 100, whatever. So it's how a company gets valued.
Correct.
When you know that the company has earnings and the earnings are increasing, and incremental capital that gets deployed in the company will also be earning. So the
Correct.
return on equity, so there is this tailwind that is happening, growth potential bhi hai. There is no concept of PE. I mean, any PE is less PE because the growth will factor that in.
Yeah.
Correct? So it's like a crazy PE, 90 ka PE de diya. Let's just say there is a second example. The second kid, myself, I was neither a star nor a failure. I did fine. I ran a SEBI registered RA, RIA. Now we are running a PMS. So we are cash flow positive. What PE would you give?
Yeah.
So this is like a second example. अब ये this is like your typical company in the Indian market. In a bear market, you give it a PE of 8 to 10. In a bull market, you give it a PE of 25 or 30, whatever.
Correct.
Then there is this third kid, my younger brother. In that case, it was Orient Paper, which is like a bad kid. Just went off the grade.
High debt and
हाँ वो मतलब उसका कुछ नहीं हो पाया. Like the closest example would be, you've seen Sholay, right?
Yes.
So like अगर जय वीरू की जब शादी के लिए रिश्ता लेके जाता है, that kind of a guy. He's into gambling, he's into liquor, he's into girls. So it basically a lost case. What PE do you give to that person?
Very low.
In fact, in a typical company scenario, if a company is not making money, so E है ही नहीं, तो PE का तो सवाल ही नहीं उठता.
Correct.
It's very difficult to value such a company.
Correct.
Now the thing with the demerger and spin-off is, when all three are living in a joint family, how do you value a company? There is such amazing variations, right? एक तो cash cow है, एक पिग है, और एक
कुछ भी नहीं है,
एक बीच वाला है. तो इसकी वैल्यूएशन क्या देगी? See, market in its own wisdom would value that company average or below average only. And some of the parts play out in demergers because once the demerger is declared, you as an analyst start calculating the individual worth of each kid. Once they get demerged, what valuation they would get. And invariably, the sum of the parts is always bigger than the whole, and that's a play in itself.
God, sum of the parts is always bigger than the whole.
Not always, but if you're able to figure out that it's bigger than the whole, then there's money to be made. And so how do you do this calculation? You basically compare them with their peers if they are available.
Okay.
So let's just say Mudit, my elder brother, what would be his PE if he was all by himself? You do that comparison and you do this calculation. 30 uska, 40 iska, 60 iska. So overall 200 rupees, let's say, hona chahiye tha. Whereas company is available at 100 rupees. So there's a gap of arbitrage of 100. So you can double your money.
Yeah.
So this is the way you play it. So we did that in the Orient Cement demerger. So sum of the parts was bigger than the whole. The second way to make money in the demerger world is what is called as forced selling. Now taking this same example further, once the demerger has happened, you will get all the three shares. You'll get the Mudit, you'll get the Manish, you'll get the
bad
Pradeep,
also.
Bad
Yeah.
also. Now let's say you're a FII or a DII, आप म्यूचुअल फंड हो, आपने कॉन्ग्लोमरेट धवंस पे इन्वेस्ट किया था, अब आपके पास तीनों आ गए हैं. Now you will sell. All the DIIs would sell, all the mutual funds would sell. What will happen? This is called forced selling. They are basically not looking at left, right, center, they're just selling. Sometimes they are selling because there is debt in the books. Sometimes they are selling just because that was not their mandate to buy.
They wanted the first two.
They invested in Orient Cement for the cement company. They wanted a cement exposure. उन्हें paper चाहिए ही नहीं. Once that happens, it creates a dent and the stock starts falling below its intrinsic value.
Correct.
So when this happened, Orient Paper के साथ ये हुआ था, we started buying. We started buying like crazy. So there was one time, finally, I think it fell as low as, if I remember correctly, at around 5 rupees or something. And we were loaded. It didn't remain there at 5 for long. I think 14-15 days, 2 हफ्ते तक रहा होगा वो 5 रुपए पर. And those 14 days were very tough for us because I would call Daya daily, like, अब क्या करना है? Because we're 35% deployed in just Orient Paper.
Oh my God.
And Daya would just simply say, अब pray करना है.
अभी ऊपर एक ही रास्ता है, ऊपर जाना है.
Our hypothesis was this: the company is not going bankrupt, we'll make money.
Yeah.
And so, but अभी pray करने का है. अभी इससे ज़्यादा कुछ नहीं कर सकते. So invariably, this is how it works. And then eventually, I sold Orient Paper at around $20, and Daya held longer. I think he sold it at 30-35. So these are two ways you play the spin-off game. First is the sum of the parts, and second is the forced selling. And this has happened over and over again, Shashank. We've made money in Orient Cement, Intellect and Polaris demerger, Mastec and Majesco demerger. Mastec and Majesco was
recently happened. Yeah.
नहीं recently पुरानी बात है, but it was even more interesting. And if I tell you this,
वो तो मेरे को समझा ही नहीं, because I remember that demerger happening. It was post COVID, I think. समझा ही नहीं मेरे को, बहुत अजीब था वो.
You will be shocked out of your wits what happened.
Yeah, please explain.
I got Majesco shares for free.
Okay, how?
So I bought Mastec before the X date. I don't remember the price, whatever it was, 300, 350, whatever. And then they declared the demerger. On the X date, I sold it at the same price, which basically means I got those Majesco shares 1:1 for free.
Wow.
That is just unbelievable.
Yeah.
And I then asked Daya what to do with these free shares.
Yeah.
And he was like, I don't know, because it's free. How do you calculate the ROI on this?
Correct.
We need to hold it. And both me and Daya thought, this is our 100 bagger because हम इसे कभी बेचेंगे ही नहीं.
Correct.
If the company grows, we'll make money.
Yeah.
I mean, it didn't work out that ways because the company got delisted.
Yeah.
Some Bravo company in US bought them over.
Correct.
And we got the final exit price was 985 rupees. Still a pretty decent 3-bagger for us.
Yeah.
But it would have been a 100-bagger because how do you calculate a CAGR on something you got for free?
Correct.
But these are the edges that play out in spin-offs and demergers.
So is this happening even in today's market? Because now we saw Tata demerging. So many companies are doing this.
So SEBI has woken up to this arbitrage at least. Now, अब ऐसा नहीं होता. Like for example, whenever the X date is happening, they allow the price discovery to happen from 9:15 to 10. It's only after 10 would that stock start listing. तो अब आप same price पे नहीं बेच सकते. That edge is gone.
Sad.
Yeah. But the sum of the parts and forced selling is still in play.
Yeah. And that will continue to be in play, right?
Yeah, I think so because this is based on
natural demand
buying. Demand supply thing. Those FIIs and those DIIs have to sell that.
Got it. I have some questions on momentum because a lot of people want to understand this as well. So when you talk about momentum, there is a myth that momentum only works in good markets. Is that true?
That's not a myth. That's actually true. But I'll break this myth by saying, name one strategy which doesn't qualify for this. You need bull market for any strategy to work.
Correct.
How would value investing, for that matter, would work in a bear market? It won't. So I started as a value investor, the special situation investing that we did. Remember, Shashank, all those multi-baggers that we were able to hit happened because of a bull market only.
Yeah.
I mean, it's not that our selection was so awesome that even in bear market something becomes a 3-bagger. ऐसा नहीं होता.
Correct.
You need, so to answer your question, you need bull market for any kind of investing.
Yeah, or else most of the stocks are down either which way.
Yeah.
Got it. And now let's try to break down this momentum thing, right? So what are the different types of forms of momentum that you have learned over the time, like, or you have seen over the time, and that's what's happening in India right now?
So momentum investing now is a household name, but when we started, only a handful of people were doing it. Momentum investing, basically either you do it on the index itself or you do it on stocks.
Okay.
So if you're doing it on index, there's this work done by a guy named Gary Antonacci.
Yes.
He came up with the concept of dual momentum. We did a podcast with him as well, where he laid bare the intricate details of this strategy. So index पे आप momentum run कर सकते हो, where you basically ranking all the stock, all the indices as to who's the best performer amongst them all. And also you are doing it in a dual way because you are also judging that particular asset class, comparing it with itself as well, that it is at least achieving, let's say, X percentage of returns every year.
Okay.
So let's just say...
So if you can give an example or break it down.
Sure. So let's just say you have 3 stocks, 3 indices, Nifty, S&P 500 of US, and let's say gold.
Okay.
Now you will rank all 3 of them on your look back period, let's say 6 months or 12 months or a combination thereof. And you'll say, in तीनों में से सबसे तेज कौन है? The fastest one is where I am invested. But I'm invested in this fastest one only if it is generating more than, let's say, 6% per year.
Correct.
उससे कम है तो I'm going in cash.
Got it.
So this in nutshell is dual momentum. And it beats daylights out of your typical buy and hold. अगर आप S&P को buy and hold करो, or if you buy and hold Nifty standalone, or if you buy and hold gold standalone, that will not generate the kind of return dual momentum would generate. But that's not the kicker. The kicker is on the downside. You will be able to reduce your drawdown by almost half, if not 1/3, by following this dual momentum technique. You get the same returns, but the drawdown comes in half.
Got it. Now in US, they have a lot of indexes, lot of ETFs, lot of options. Have you seen this working in India as well with respect to indexes?
Yes. So we did this. In fact, when after interviewing Gary Antonacci, I did this test in India. I shared that in my blog as well. This works beautifully in the Indian markets. stocks. The combo of Nifty, S&P 500 or Nasdaq 100 and gold works beautifully. It cuts the drawdowns beautifully, gets the same returns.
And what about Indian indexes? Let's say Nifty Auto, Nifty Metal, because the same principle can be used there, right? So have you seen that working there? It's almost like a sector rotation. I come to know slightly in advance.
Interesting.
Yeah.
I have not done any work on this, but I'm pretty sure it might work. You asked me the segregations of... So I am not a fan of this dual momentum thing, and my reason is that you pursue this when you're already rich.
Okay.
So because you will get your returns of 18% with lesser drawdowns compared to a typical buy and hold. But 18% is not what we are chasing.
Correct.
Because we've not made it yet.
Yeah.
We are ideally hitting for a 24-30% CAGR.
Correct.
And to get that kind of return, you have to basically venture into the stocks directly.
Okay. Now that was my next question, right? Coming into stocks, how do you formulate this? Does the same principle of look back period, or just to explain it in simple terms for people, how would one strategy look like?
So it will look like same, but there are nuances that you can keep adding, because now we are not talking about indices, we're talking about multiple stocks. So
Correct.
First decision you have to answer is your universe. How wider the net you want to throw. So like for example, at Mystic Wealth, we did a universe of total Nifty, which is 750 stocks. This would be our universe.
Okay.
Going beyond that can get into liquidity problems, so we don't want to go there. Although if you're a retail investor, you are well advised to basically swing for the fences and go for small caps and nano caps as well.
Okay.
Of course, the caveat and the disclaimer, there can be instances where you can get into low liquidity pockets and get stuck. But let's just say if you got anything less than a crore, you can basically, the entire Indian market is your playground.
Wow. Okay.
Yeah. So first you decide the universe. Then you decide the number of stocks that you would be holding in your portfolio. So our backtest suggests that going beyond 30-35, you're diluting the entire exercise, and there is no incremental benefit of adding to this 35 number.
Yeah.
35 is the max that you should be going. And this holds true for the 750 universe that I'm talking about.
Okay.
Sure, you can have lesser, but lesser would have more volatile gyrations in your portfolio. So if you're going lesser, let's just say if you have a 10 stock portfolio, then I would suggest that you dilute your portfolio with gold or debt to have a little smoother equity curve.
Got it.
How are you going to rank them? There are various ways in town. So you can rank them on their rate of change. Simple, plain vanilla. Last 12 months में सबसे तेज कौन है? I'm just taking them. Top 30, I'm buying them and rebalancing them every month, let's say. Something as simple as that works beautifully as well.
Okay.
Or you can get creative. You can say that 12 months में तो past winners आएंगे. I'll probably miss the latest talk of the town stocks. Then you can do a 6 month and 12 month ka average. Or you can do a 3, 6, 9, 12 ka average.
Wow.
Everything works. So we were discussing this before this podcast started, that invariably you will get a feeling that the one that I've selected has stopped working and the other one is doing fine.
Yeah.
It's like standing in a queue syndrome.
Yeah.
End of the day, everybody would reach at the same goal. The CAGR and the drawdown parameters of almost every strategy is same.
Okay.
It's just that their route to reach there is different. So select your poison and then stick to it. Don't hop the queue once you have selected the one.
Yeah, I think this is because there are so many variables in Quant, right? Like every small tweak can change the entire value curve that is coming out there. So that is very interesting. Now I want to ask one more thing, and then we'll go into drawdown management. Okay, if a normal user today wants to get into momentum and he has a small amount of money that he wants to try this with, how can he do it?
So these days it's pretty easy. See, back when we started, I had to code everything.
Correct.
But now, because more and more people are getting into it, and there are volunteers who are doing it. For example, Viraj has this website, Momo Screener something, right? Where you can just one click of a button and the whole ranking thing comes for you. Similarly, I'm sure Ticker Tape has these momentum screens these days.
Yes.
And abhi to you can do it on Google Sheets as well. You can just rank the stocks on ROC and Sharp, and the ranking is done for you. So it's pretty easy. All you have to do is select your universe and then rank your stocks on ROC or Sharp or whatever, and then you can also add nuances to it. Let's just say you want to hang out with the cream stage 2 stocks only within this. So what you can do is you can also add one more filter saying that I will not venture out of any stock which is below, let's say 25% from its all time high. तो मैं खाली top के ही जो super stocks हैं उन्हीं में रहूँगा. That works too.
Wow. Wow. Oh, that's very interesting. Now, coming to the next topic that a lot of people talk about is momentum. कि जब ऊपर जाता है तो it is very fast. And I remember you quoting this saying Bhav Bhagwan Che in this, because what momentum teaches us is if it's going up, it will continue to go up. It will not, a lot of people assume that if it goes up, it will fall down now. But when it falls, what we have learned that when momentum falls, it falls deep. Right now, if I'm a normal investor, we are not used to seeing 15% drawdown, 20% drawdown. Abhi recently we had seen our whole portfolio going down by 15-20%. You know, normal retail investor. बहुत दर्द होता है and you feel helpless at that point. So if I'm playing a momentum strategy, how can I negate this or optimize it better?
Interesting, Shashank. First of all, 15-20% drawdown तो कुछ भी नहीं है मेरे दोस्त.
Oh my God.
So if you're saying that there are clients who are chickening out at 15-20%, ask them to brace themselves, because if it's a equity only portfolio, you will easily touch a 30% drawdown.
What have you seen max in your?
So in 18-19, MWM fell as low as 28%.
Wow.
And that can be painful.
Yeah.
And I'm not even talking about 2008 kind of a crash, by the way.
This was a small
blip compared to that.
Yeah.
Although hopefully if you have a cash call mechanism, 2008 kind of crash can be avoided. Like for example, in Corona crash, we did not fall much. We had a 9% drawdown only.
Okay.
Because the cash call saved us. But in a whipsaw kind of a market where the cash call is not coming, that's the nemesis of the momentum.
So let's understand two things here. One is portfolio construction to reduce natural drawdown. Second, how do we take cash calls, or what are the basic principles that someone should look at for a cash call?
To answer your first question, the only way to mitigate the natural drawdowns is asset allocation.
Okay.
So I did the CFA presentation. Audience would do well to go through that, where I clearly showed that this pain that you get, that drawdown pain, can actually be reduced down to your pain below the threshold. And the way to dilute that is by diluting it with the uncorrelated asset class.
Correct.
So we came up with this product MMG, Momentum and Gold Combo, precisely because we saw that although MWM had a drawdown of only 28%, this 28% is lot more than the pain threshold of lot of clients. So when you dilute it with gold, your drawdown comes down considerably. Like, just to give you live example of MMG, that product basically had a max drawdown of around 14.8% only, which comes within the pain threshold, and you're able to enjoy that ride.
Yeah.
So to answer your question, the only way is to dilute it with either debt or an uncorrelated asset class like a gold. Okay. And as the second question, the cash call, it's a risk reward thing, Shashank. Cash calls don't come cheap.
Yeah.
So it comes at a price. So for every one crash it saves you from, there will be at least 3 cash calls which will be bogus and will make you look stupid.
Yeah.
And they will come at a cost. They will reduce your alpha.
Yeah.
But this is a price you have to pay.
Yeah, because I know a lot of people in the market say that when Nifty breaks, I'm giving a very simple example, 200-day moving average, we will go into cash. But many times I've seen it goes down and then comes back up within the next week.
Correct.
And you have exited all your stocks,
Correct.
STC, GB, IGAR, transaction cost, STT, everything you're going to get
Correct.
hit. So that is a very complicated thing you're saying, right?
Ki
you can never time that perfectly, but you still have to follow the rules that is there in this.
Correct. Add to that, Shashank, there is something called as a decision fatigue when you take too many cash calls. And this is a not talked about topic. What do I mean by decision fatigue? See, if you're taking a cash call, you're going back in again. Let's just say it's a whipsaw and a cash call has come again. 7 out of 10 people will not come back again.
They'll think you're losing your mind.
Yeah. Yeah, because the fatigue would be such that they will lose the hope. And this is the last thing you want, because the next bull run, you'll completely miss it.
Yeah.
And so it comes with a fatigue. It only for the stoic mind who can follow the system blindfolded is the one who can take those cash calls.
So momentum is very, very, I would say, difficult when it comes to mental psychology, right? When you're doing it.
So my suggestion to usual retail would be to dilute it to your sleeping limit, which is to say, do the asset allocation in such a way that you exactly know, okay, worst come 2008 kind of a crazy crash bhi aa jaye, what will be my drawdown?
Yeah.
And you can do that by doing diluting it with uncorrelated asset class. So cash call ka jhanjat hi khatam. You, let's say 70% deployed in momentum, 30% in gold. Let's say if you're more conservative, you can do even a 60-40, whatever works for you. Of course, your returns would be lesser than a plain vanilla momentum, but at least you'll be staying the entire journey.
One question on this lines, because it's trending right now as well. You mentioned gold and equity, right? But in India, are there any more uncorrelated assets? Because gold now also is in that prime momentum zone right now.
Correct.
So doesn't also that pose like a risk where both factors might get affected because of overvaluation? Or maybe it's not overvaluation, but it's high momentum?
So I don't know the answer to that. Whether gold is overvalued or not.
Yeah.
Maybe it's a
Pure momentum.
New paradigm shift that's happening. So I will not comment, but you're right.
On any other uncorrelated assets?
Uncorrelated assets, USD INR was one earlier, but now we don't have any exposure to that because RBI took that right away. Debt and gold are the only two options.
Only two options.
REIT is also there. It's not uncorrelated, but it's a separate asset class altogether, which is now doing the rounds in the
And what
Indian
about low volatility? Because I know there is this Nifty 50, there's this Nifty index called low vol index as well, which is, or, things that are not supposed to fall. So a lot of people go into FMCG when we have a crash. We've seen most mutual fund managers buy FMCG companies. Have you seen something like that working, or do they also take a hit when it comes?
They fall lesser, yes, definitely. But you much better off with debt rather than low vol, because wo bhi girega to sahi na. If the market falls, even low vol will fall. Sure, it will fall lesser, but it's still totally correlated.
So it's better to have a liquid fund and just keep it there for the time being or something like that?
Correct. Like for example, we've just recently launched this company Inflow, where it's a mutual fund distribution company, and we've come up with this factor edge portfolio, precisely catering to this requirement, where we've divided the portfolio into three components: a momentum, quality as a factor exposure, and 30% in debt.
Wow.
Basically liquid debt. But here's a kicker, Shashank. The kicker is that this 30% component is dry powder, which will get redeployed into equity at preset drawdown points.
Superb.
So over the years running momentum and value products, we realized that there's this fixed drawdown points at which the market invariably bounces.
Got it. Beautiful.
So let's just say if there's around 15% or 20% drawdown, MWM has this tendency of bouncing back. Now, if I have 30% deployed in debt, I can basically redeploy it into equity and generate that extra alpha.
Superb. Now, I have a question from India versus US kind of a standpoint, because in US we have seen the rise of Quant happen way long ago. But in India, I see this happening right now. What is your vision of what is going to happen with India with respect to momentum, quant, etc.? Because we're seeing a lot of quant mutual funds coming now. In the last just 4-5 years, we've seen this. So is this something that is exploding in India right now, or like a new person who's entering the field, should he also look at this?
So definitely. I mean, this is the thing. I mean, when we started, there was zero mutual fund exploring momentum, which was pretty surprising and shocking. Because here's something, a nobody like me has been able to figure out a definite edge in the market.
Yeah.
And mutual funds have fund managers earning crores in salaries and well equipped to do it. They are better coders, better quant guys than me for sure. And for some reason, they completely were sleeping at the wheel.
Yeah.
But now, like you said, you're right, they've woken up, and this is something that will engulf the market for sure, because factor investing is the future.
Oh, and one more thing I wanted to ask you. A little controversial. I don't know whether you're okay to answer it.
Sure.
I heard that most of the active momentum strategies in the market, the mutual funds, are 6-month rebalance. I think we missed the point of rebalance, so I wanted to talk about that. But most of the momentum strategies, what people proponate is at least weekly, monthly, or bi-weekly. So what is your take on this? That's all.
So Shashank, this is not a controversial topic at all. In fact, I covered this precise point in my CFA Chennai presentation, where I categorically said this is the only edge in town that is left.
Oh.
The day mutual funds change their rebalancing to monthly, which is something they'll wake up to as well.
Eventually they will do it.
There is no edge left. In fact, they have a tax advantage over us.
Correct. Oof. Okay, so now we have to think of deeper strategies, yeah? And if you don't mind, is that I want to learn more about this, let's assume, right? Any blog articles or any places where I can go and learn this in the market today?
Yes, so if you are new to momentum investing, the first place that I would recommend you to is go to Prashant Krish Slack channel. Prashant Krish is my friend. He runs this free Slack channel.
Okay.
And a lot of practitioners go there. And it has repository of from scratch to the rabbit hole. You can go crazy.
Yeah, wonderful. And any books or blogs or websites that are actively talking about this?
So read books written by Wesley Gray. Read books written by Klenow. Read Dual Momentum of Gary Antonacci. And more importantly, rather than just reading them, try and code those strategies yourself. And once, because एक चीज होती है आपने पढ़ लिया, सुन लिया, you will not be able to deploy your money. If you've coded it yourself and you've seen the ups and downs, you develop the conviction to put in your own money. Yeah.
Wow. Yeah. Wow. I think that was very, very, very interesting. Again, I want to really thank you, Manish, for this, because a lot of people don't understand quant and momentum. I think next 5 years, I think most of them will understand it and realize, okay, but by then most of the edge would have also gone away. One last thing I want to ask you, in this game of quant and momentum, do you think knowing someone else's strategy would reduce the alpha that is there in the game? Because it's a time sensitive game, right? It's like a monthly rebalance kind of a thing. As you said, if mutual funds do monthly rebalancing, maybe someone else's edge would go. What is your take?
So the edge is behavioral in nature, Shashank. I can share my MWM code with you right now if you want. Our returns would be different.
Beautiful.
The edge is behavioral. So if it was an option strategy where my drawdown is just 5-6% and the return is 40% CAGR, sure, I will not share it with you.
Yeah.
But here the drawdowns are crazy. And so the edge is behavioral in nature. No, you think you were stoic enough to handle it. Comes the next drawdown, you'll start questioning your own strategy.
Yeah. And if I had to ask you, just on India, right? We have seen a very long time correction, right? Both in momentum, every strategy has seen a time correction. According to you, from your own thesis or analysis, do you see us coming out of this anytime soon, or do you think it'll take more time?
I don't know the answer to this. I've removed the prediction game out of my equation.
Yeah.
But to answer your question, of course, the pain can continue. I mean, history tells you there can be 3-5 year periods of nothingness. So US has better history than us. Their momentum has struggled for years altogether. There can be let's say half a decade of nothingness as well.
Yeah.
So yeah, I mean, I don't want to scare the audience or anything, but nothing comes with guarantees.
Yeah. That's fair. And do these things also work in US? The same strategies work in US as well?
Not as much, but they do. They are doing better than the typical buy and hold.
Wonderful. Awesome, Manish. I think that was the entire episode. But again, I really want to appreciate that you have come here and given us so much knowledge to everybody, so that a normal person who doesn't understand momentum investing can also understand, right? So again, a big shout out to you and thanks a lot. And for all the people who want the book recommendations that Sir mentioned, I will put it in the description for all of you guys to read. Anything else you want to tell the audience? One last line.
Yeah, sure. One thing that I would like to take this medium to talk about is a pretty fascinating thing that I feel where retail's missing the point is that, we did this pretty interesting exercise, Shashank, where we invited mutual fund portfolios of our existing clients in MWM, because we just launched this inflow product. So I just wanted to understand what is their current holding. Okay. And when we did that, we had around 90 different portfolios that came along, and to figure out what's happening on their portfolio front and where they're going wrong, some fascinating insights came out of it.
Okay.
So my friend Varanya coded this interesting utility where once the portfolio comes in, that utility does the calculation and everything and figures out what's going in, what's working and what's not working for these portfolios. Fascinating stuff came out of it. First was the concept of recency bias. invariably retail ends up buying the latest fad in town,
Like gold today.
like gold and silver today. In fact, Sahil Kapoor just recently tweeted a pretty interesting tweet where he mentioned, I don't remember the figures, but some crazy amount of, I don't know how many crores of silver ETF being bought just in the month of September itself, which is a huge percentage of its total AUM.
Correct.
Crazy. And it's, when you watch these portfolios, it's like functional equivalent of watching a battlefield after a battle. Skeletons lying here and there, and just by looking at the dead bodies you exactly know what has happened in this portfolio. मतलब वो 2023 में उन्होंने डिफेंस उठाया होगा एकदम पीक पे.
Correct.
So I'm not saying there's anything wrong in buying momentum, but the problem is they don't have an exit plan. And so this is one of the biggest factors. The recency bias plays a huge role in clients' portfolios today. And so this needs to be addressed.
Do you also feel AMCs are also fueling this by giving them products at the right time?
True, because they will sell what sells. I'll give you that. That is true. There are all kinds of players in the industry. Sure, they add to it. But in this industry, the caveat emptor applies, right? Buyer has to be aware of it, because you will end up with a product with huge drawdowns later on. This is not new. This has happened all the time. 2008 में real estate बिका था, then infra boom में infra बिका था. वो कचरा पड़ा ही रह जाता है.
Correct. Defense boom में defense बिक रहा था.
Right, exactly.
Okay.
Second interesting thing that we noticed was invariably everyone is over diversified. Like a typical retail म्यूचुअल फंड पोर्टफोलियो हैज 8 to 12 म्यूचुअल फंड्स. उसमें स्मॉल कैप भी है, लार्ज कैप भी है, मिड कैप भी है, एक थीमेटिक भी है, एक मल्टी एसेट भी है. मतलब खिचड़ी सब कुछ ही डाल दिया. एंड इफ यू काउंट द यूनिक नंबर ऑफ स्टॉक्स दैट दे हैव एक्यूमुलेटेड, द टोटल गोज टू 550 stocks. Now, when you've bought 550 stocks, you've practically bought the entire market.
You could have just bought Nifty 500 and sat down.
Exactly. You just buy a total market.
Yeah.
And the returns would, इतनी effort क्यों की, उतना commission क्यों दिया? You cannot beat the market by buying the market itself.
Yeah.
So as our backtests have suggest, in a 750 stock, 30 stock portfolio is all you need. Just imagine, anything beyond 30 is not diversifying the risk.
So if you had to convert this into an actionable strategy in mutual fund today, so that people watching have realized this mistake, how would you change it?
So this is precisely how we are changing it at Inflow. We are doing these factor allocation, factor edge strategies where we are just giving factor exposure, 3 mutual fund portfolio, that's it.
And then gold and debt.
Correct. And our backtest clearly suggests ऐसा नहीं कि you will missing on anything. You will generate better alpha. In fact, because of the dry powder nature of the debt, where we will convert it into equity, it will generate better alpha than your 12 mutual fund portfolio. So it's a game changer. So these are the two things that I noticed: recency bias, which is a killer, and over diversification. And the third point, Shashank, is overconfidence. I speak with anyone and they basically say 30% drawdown तो हम आराम से झेल लेंगे. And some people even start quoting Charlie Munger. जैसे चार्ली ने बोला है कि anybody who cannot withstand the 50% drawdown once in a while, these are the basic vicissitudes of the market, then he's not cut out to be in the equity. यार ये बोलना बहुत आसान है. 50% drawdown, let's just say you've got 5 crore का portfolio and आपका 2.5 crore गायब हो गया.
सोच के डर लग रहा है.
It's like, I famously said it's a joke, but it's not actually a joke, it's actually true. It's one thing to play on a PlayStation and a tiger comes and you're killing the tiger, but tiger सब असल में आएगा तो you getting what I'm saying?
Yeah. I know someone else had said this as well. Everyone is a long-term investor until the stock falls 25%. Then everyone's like not a long-term.
Yeah. Mike Tyson said it the best. Everybody has a plan against me till they get a punch on their face.
Wow. Okay. Yeah. Perfect. Yeah. So that's when stock market gives you a punch on the face and you're out.
Yeah, I'm not. 50% तो दूर की बात है यार. 15% drawdown पे I've seen people chickening out.
Yeah, we had this recently, right? September to March का जो fall में ही हम लोग ने देख लिया था बहुत सारा chicken out, and the SIP inflow stopped.
Correct.
That was a clear indication of people chickening out.
Absolutely.
Yeah. Wow. But again, super Manish. I think that was amazing, and thank you all. Thank you, sir, for those insights. Mainly in the last part, which you spoke about the mutual fund, because I feel that is very actionable for people who are watching this. And guys, again, big thank you, sir, for coming here and spending this time. I know the audience will definitely love it, and I would love to keep having more conversations like this as and when this space evolves over time.
Pleasure was all mine, Shashank, and I would love to come whenever you invite.
Perfect. Thank you, sir.
Thank you.
Thank you guys for watching this episode. I hope you guys enjoyed this. Please subscribe if you haven't subscribed till now, and I'm going to see you guys soon in the next episode.